Crypto's back on track. This is Market Sniper, the Crypto Sniper today, and also the Reset Sniper. Remember to sub the other two channels, Market and Reset Sniper. I'm talking to you about Bitcoin. I'm going to make it a quick one. Bitcoin is in a good state. So it's timed out for its chance to make its downside targets, which is great, which shows implied strength. Further to which I will show you, so I'll take our timeout box off. I'll show you this particular level here in and around the 30,000 mark. We can get it exactly 30,000. That's it, 30,000. So we reached for 30,000, then we traded through it, then we came back. We failed to make a new low here, and we are in a falling wedge. So we talk about wedges. We can do this possibly even easier with the big TG ping lines. Stick him on. There's one already that you recognize, and this is how I'd probably construct the rest of the falling wedge. We're getting a squeezy Japanese in here, and generally these resolve to the upside. The gradient to the downside is very slight, so it's going to get a little bit of a bump. We have our three impulses in here. You'll learn how to trade and what we think of wedges, by the way. If you want to come and join us on a program, book a call on the links below. That little bit of head and shoulder mini structure, it's not really a head and shoulder, is it? Because it's not at a secular high. But you get those kind of fractals that fail, and it just tests the 30 and it fails to make a new low. We in the premium community started getting back long here on the short time frame when we started to squeeze on the basis that this is going to work up. So what comes next? It's going to work up in and around, not super fast. This is not going to be just straight to spike moon now, remember. In fact, I think we're not even out of any move that comes here, we're not even going to take this high. I think we're going to come, and I'll tell you what my best guess scenario is for this. But I think we might fractalize and have a little squeeze pushing up against this line before we pop. Then we'll have a decent pop. We'll possibly run up, and you'll see I've got some legacy levels that are here. You see the thin green line, the orange line, and the red. We'll stop probably somewhere there, and then that's going to be a little bit of a turn back point. After a break in a falling wedge to the upside, you typically get some degree of return move. So you'll come back maybe a little bit, maybe you'll wind up a little bit, and then we clear both these, what we call funnels. So it'll be the one that you stopped in and this one. So you get enough strength that key levels of significance are broken really hard. So that will be broken, and that as part of quite an impulsive move. Then you'll staircase back and use these levels as support for any further move and maybe work your way a little bit higher. My assessment is that you're going to probably run this last relative high, which is just sub the 38K, but I'm not sure you'll easily bypass the 40. So my best guess is somewhere just above 40K to somewhere just below 30K is where we might top out. Before having a little bit of an ease back, kind of drawing a little bit further into the future here. Let's see what happens if I buy a bit more real estate and pull that all back. Yeah, so you pull a little bit more back, and I think overall then we'll probably have one of a number of things, but probably my favorite would be to squeeze again like that, where this whole falling wedge is one impulse, this is a second impulse, and we go looking for a third. So in short, this is very good areas and range to start picking up BTC again. Bear in mind, don't leverage trade if you don't know what you're doing. You'd need to still have stops in place, a variety of other aspects that you're going to need to know and do to be successful. But overall, this looks like the end stage for the downside. That doesn't mean we're immediately super impulsive upside, but what we will be is inside the range of that was stipulated. So this created a range of a 42K down to the lows that were tested here at 29 and just above 29, but largely the key level of significance being the 30K mark. These big round numbers hang heavy. And don't forget, we also had our, let's use a better line than that. We had a rising wedge squeeze up to the 30K mark, and that's when we started to get pumpy. And that's when things got a bit more thrashy and a bit more out of hand, as is typical with markets. So you were nice and stable all the way up to our first cup gold nugget target, and you had a nice wind up that also confluenced with it. Then you started buyers only coming in, pushing up, some tactical selling initially, and that squeezed up into a wedge. That took you from our first cup gold nugget targets that we gave you to the 30K mark. Boom. And then you popped, pull back, and then run. Interesting observations. Let's talk about interesting observations as well that are of a historic nature. So we go a little bit out onto the 8 hour. So we've got this Fibo that you can see, this red, greens, various 50 shades of greens into the blues. That captures where we call the beginning of this move. There's a very key inflection point that we utilize there. Once again, you can learn more about how and why and how to do it for yourself, etc. on a program. Just book a call. Don't talk to a salesman. Talk to a fellow trader like you that made the decision to do similar a couple of years before you. Anyway, so the interesting part about all of this is that rising wedge squeezed in here. This was an insight I put out to my premium guys actually this morning when we were getting back longs in here. So you're not far behind us, and I still think you'll pop out and we'll possibly have a return move. So you're getting a good update in good time. Just post the first cup gold nuggets target, and of course this little wind-ups confluencing target. And actually you'll notice if you're a fib aficionado that this actually, I pulled it out of place now. Let me put my jaw back in there. Let's get it so that the blue lines are in the right place. This all confluences with a 60, hold on a second, what was I about to say? Get that straight. 61.8% fib. You see that right there? 50%, 61.8. You see that? Now we call this a key inflection point, and we're teaching and getting into this quite recent and new theory actually about this. This occurred at the 61.8% fib. When you do from our breakout low points to the absolute high at the just around the 42K mark. And that golden mean, 61.8, if you had drawn the fib from this low where we've done it and up to, and you'd put the 61.8 on that key inflection point, the 100% mark, that mark would be exactly on the eventual high. So if you want to project forward using Fibonacci and you get a key inflection point and a key turning back point, it's very, very, very interesting. We also had key fib levels here, if you can recall. Let's just show you something interesting on that point. And we have these levels because HVF method generates them. If you go and put that same 61% there, you can see you get our first cup gold nugget target. Our first cup gold nugget target ran straight through our primary interim level. Now I need to maybe expand that a bit. There you go. And let's wipe the face of all the legacy drawings. You can see the 61.8 key point, and this was your key inflection points. So we've told you, and you can learn, as I say, more about this, that was a key inflection point, and that was a key inflection point. That was already on our interim level 2. Plus it dovetails with the volume by price max peak. I'm not going to put it on. We cover all of this in a program. As I say, there's so much power here to be learned that you can take forward. And these were 2. So you put the 61.8% here, you get the full first cup gold nugget and this little wind-ups target. And if you then move the 61.8 from this inflection point and you put it on that inflection point, you end up with the absolute high. You think that's a coincidence? Both these things are coincidences. See that 61.8? It's the green where it turns light blue. I put it on, wait for it. It's also that 30K mark. As that broke, and you get virtually, I've drawn it a tad high there on my that draw, because that was where we went parabolic there. You get the high for the move. Isn't that incredible? You get the high for the move. So once again, that circle your rising wedge went right about parabolic on that point over there. Look at that, how it gives you the high, 42,000. So, as a little test, so we're reverting back bull. We're going to break out of a falling wedge in our view now. The downside threat has passed without seeing it fall through to target. That is a sign of long-term bullishness in our view. Where will you go? You'll go, as I say, probably at some point you will run this just through. I think you might challenge and take that, but I'm not seeing it being as easy to take the 40k. You top out maybe and pull back in and around, and maybe we'll get a nice ascending wind-up structure, which would be amazing for future upside. But going back to this, where will we go, and what if we apply what I've just demonstrated to you using the golden mean fib at all our key inflection points? This top is very, very clearly a major turnback point, much in the same way as this level here on our interim level 2 was a key Fibonacci point when we were comparing it to our target. You can see the 61.8 came and sat perfectly on it as I put that on target. So here's a thought for you. What if, wait for it, I'm off the screen now, I need to buy some more real estate, get in here. What if we put our current high point on our top that we attained of 42k? What is the final target before we get another major structural pullback? And the answer is 62,000, 62,300. It'll vary slightly by exchange. So the next leg, look, there'll be some small wind-ups and small pullbacks. The next major possible pullback will be when we're already through the 60k mark. So that could be very, very positive for you. But don't forget, we still have this whole process to happen and wind up here. This has been a big, big pushback. This is the most significant. It was the 25.7 to the low here, I think it was, and we haven't made it any lower really, or was it 25.7 there? I'd have to check. I think it was actually to that one. So we probably did about 28. Might have to check the numbers there. Let's have a little look and wipe the face. We still that was on a largest single pullback, even in percentage terms and definitely in dollar terms. That was fairly strong over here at our second interim of HVF method. So yep, 62 would be very, very nice, but I don't think you're going to go straight into mooning just yet. You're going to play in the zone that's now been defined for you, the 42 and the 30k, and in that zone a form of continuation structure will emerge that will then lead to the beginning of a new series of highs, with some pullbacks along the way, but none of them too big. I would guess round about maximum one that size again, until you get to 62k, whereafter you once again may get a degree of pullback around that scale. Just a bit of me talking out loud and giving you some trading ideas. Okay, so we are back on the long train. The trade will be a breakout of the falling wedge. Me and the community have already decided to take longs. Those that have wished to have done that. Certainly investment pot should be loaded. By the way, quick comment on Ethereum versus Bitcoin. So let's give you that as well as a minor update. Secondary to the fact that crypto will be getting, this is very significant that Bitcoin will be trading in this box range as part of a wind up, because it will allow and permission alts to actually play catch up and do rather well. Because what will happen now is that the down leg, the corrective phase, is largely over. Now we mess about in the zone, mostly to the upside because you're at the low part of that zone now, mostly to the upside of this, and form a future continuation pattern to the upside. So that is supportive for an extension of the alt runs. So what that could see is, if Bitcoin does 5%, you'll get 8, 10, and 15% out of the likes of Polkadot, Link, and some of the other faves, maybe even Aave and Uniswap will come storming into the top 10. And some of those older cryptos that I don't rate will start to slip. Bitcoin Cash, Bitcoin SV, definitely. Ripple will continue to lose ground, I think, but it's still a pretty large market cap. So you'll see that shuffling, and that will allow a good alt run period. Which brings us to Ethereum, which if we have a little look at, that's a messy chart. That's a hard-working man's chart, I can tell you that. I have cleaner versions of it, but this is great recovery. I think overall this is going to squeeze up higher as well, and the best chart to possibly look at is to take into account this overall structure on the fall. So we broke away, we broke the fall. This is the neckline of, and if you don't know about this, I'm not going to go revisit. I can't do everything over again on the basis this is, you haven't seen anything. Go check the FBTC. We're on a right shoulder. This is the neckline, the 4% of a Bitcoin. So this is kind of finding support and rounding out. But will it first, when Bitcoin starts to move, if Bitcoin moves too aggressively, it will suck some of the honey out that the alts normally get. So you could have an initial relapse first. Longer run, 6.66 to the upside percent of Bitcoin. So that means an extra 50% plus on the performance of what Bitcoin will give you during that period. Given that it'll be up and down and in a larger continuation pattern, it's not going to be yet runaway break, but Ethereum can do potentially very well. Currently on a down leg, we can check it out on a shorter time frame, but it does seem to keep getting bought out, and people that like rounded bottoms would argue that you had marginally lower lows, then failed to make new lows, and now you're getting higher lows. And actually you've started getting a series of slightly higher highs, although that one hasn't yet shot that low. If this finds support in and around this region, you may continue to cup out. A slight risk, as you can see, I've drawn a bit of a grind line across there, that you might have a rally and then a stab down, and you might do a more complex bottom where you then have a double bottoming between those two lows, and then you rally again, and this bottoming process extends out before going up. So I would say if that were to happen, 4 is a very good zone to buy Ethereum for its overperformance against Bitcoin. So Ethereum will continue to probably walk its way up against the dollar, while Bitcoin is in that 42K to 30K zone. As I say, I don't expect it to be too much above 40 for too long, but we don't know. Near the end, it might squeeze up against the ceiling, and it might be highly ascending. So we'll watch that. Okay, that's your quick uptake. Prepare for bull season to reassert for alts. And Bitcoin to be in a consolidation where it's going to trade largely up, but will have up and down legs within that as part and parcel of setting up a continuation pattern. Thanks for watching. Links are below the free mini series. Shares are greatly appreciated. Report the spammers. We chase them down, we track them, and we'll also book a call if you want to become part of the community and be in these kind of trades a little earlier and get this kind of analysis a little sooner. Okay, all the best to you guys. Thanks for watching.